So what can you charge at a property in terms of rent? What is the market rent for this property? What does the market say? What are other properties saying? How much can you actually charge at a property? It's going to be one of the biggest questions you got to answer when you're analyzing a multifamily property. That's because your rent premiums are going to be one of the biggest drivers of your revenue increase. Now, your revenue going up means that your NOI is going to go up, which means ultimately your property value is going to go up. So if you're a value-add multifamily investor, understanding and accurately predicting the rents at that property once you take it over, you do your renovations, you do your value add, it's going to be one of the biggest questions that you need to make sure that you get right before you buy a deal. My name is Sita Dambuya, multifamily investor and consultant. Been in the real estate business about 6 years and multifamily about 4 years, and have experience in both market rate and affordable housing. Aside from being an owner operator, I also help other operators analyze and underwrite multifamily deals. In this video, I'm going to walk you through my proven process for analyzing a property and understanding what the market rents are based on the submarket where that property is located. So why do you need to know what the market rent is for a particular property? So the market rent is going to be what you're going to rent it for once you take it over and improve it. So you might buy a property and your business plans to go in. You're going to renovate the units, you're going to add some backsplash, you're going to put in some granite countertops, put in some wood flooring, etc., etc. You're going to do a few different things in both the interior, the exterior, and how you operate the property to improve its desirability and likability, and ideally bring it to meet the standard of the other properties in that market so you can command top dollar and the top rents in that market. But how do you actually analyze the market and understand what those rents are? You got to be able to figure that out before you buy. Because if that's part of your business plan to be able to raise rents by $150 across 100, 200, 300 units, and you're off by just a little bit and you can only get to 125 or even $100 on your rent increase, that's going to have a huge impact on the revenue increase that you see at that property, which is going to make it very hard for you to meet your NOI goals, which means the value that you projected and the value that you plan to exit or refinance at, you're not going to be able to hit that value. That means that your business plan is not going to be fully executed, and you're likely not going to get the returns that you projected for yourself and for your investors. So it's very crucial that you have a great plan for doing this. Now, there are a lot of paid ways that you can get this data. You can go to CoStar, Axiometrics, Yardi. So if you have the budget for these can be an easier way to be able to get rent comps, and it can make your process a little quicker than you having to pull rent comps on your own. The challenge though is that sometimes these providers, these data providers, they don't give the best or most accurate information. A lot of times it may not be up to date, it may not be very accurate for your particular market or your particular property. And then at the same time, the cost associated with these platforms can sometimes be prohibitive for a lot of people. A lot of people are new in the business. It's a little too pricey. Like you might be paying several $100s, maybe even $1,000 a month to be able to access all of this data, and for it to not be the most accurate. So if you want to be able to get rent comps on your own, there is a way that you can do it using apartments.com, and I'm going to walk you through that process. But first, let's talk about what is a rent comp. So rent comps are very important in that they give you an idea of what the market is renting at. What are people in this particular area where the property you're analyzing is? What are people in this market willing to pay for rent? What can they afford to pay for rent? The best way to do that is to look at other properties. First rule of business, anything is only worth what somebody else is willing to pay for it. It doesn't matter what people tell you is worth. It doesn't matter if it ends up in a magazine and this is one nice place to live, it's on all these lists. The bottom line is, when you got to analyze a property and you want to know what the rents are, you got to look at what people are already paying to be able to figure that out. So a rent comp is going to be something that's an actual comparable property to the one that you're buying. So think about similarity in age, similarity in renovation. What's updated? Is this one offering granite countertops versus this one's offering outdated countertops? That's going to make a difference in pricing. Think about similarity in terms of proximity to certain things and points of interest. What's closer to jobs? What's closer to schools? What's closer to retail and entertainment? People want to live closer to these areas, so they're going to pay a premium for these areas. Then think about similarity of amenities on the property. So if one property has a full pool, like a resort style swimming pool, whereas another property doesn't have a pool at all or has a much smaller pool, the one with the resort style pool is probably a nicer property with better amenities, and you can charge more for that property. So this is going to be your main factors. It's going to be, location, age, finish, amenities, and those are going to be the primary things that you want to look at. And you also want to look at distance, how far one property is from another. The closer the property, the better the comp it is, as long as it's in the same submarket. So now let's get into the actual process. Okay, so this is my rent comp spreadsheet. It just basically has a column for every rent comp you look at, be able to collect the data, and then it has built-in formulas that automate some of the calculations for you. And it's broken out by floor plan. And if you want, you can add some information about the amenities, but we typically don't get that deep doing these, not until like maybe if we're actually going through full due diligence, we'll really look into it that deep. But this is where we'll put all the information, at least down in these areas, and then everything here is calculated. Then down here, we'll calculate the on a floor plan by floor plan blade on a floor plan by floor plan basis, it's going to calculate the minimum, the average, the maximum, and then do the same on a per square foot basis for each floor plan. Now we keep the subject property information up here as a reference point. So we're going to do this for Douglasville proper, which is one of the properties we own. And it is a 100-unit LIHTC, so it's affordable housing property in Douglasville, Georgia, built in 1995. And we're going to find comparable properties that we can use to project out the rents for this area. Now, this particular property is affordable housing, so the actual rents won't be comparable, but we'll understand what the market itself is renting at, which is important for us to sell our rents, even though it is affordable. Now, let's jump over to, I already started doing some of this stuff. So, first things first, you want to start off in apartments.com. Now, take the address and you're gonna search for it. Now, I try not to search for the whole thing, and it's still probably gonna do it. But I try not to search for the whole thing because it just takes you to the property, and we don't want that. We want to get to the map. So here is the property itself. So Douglasville proper is right here. So we want to make sure we filter out and just have apartments. All right, that's good right there. Just apartments. We don't want houses or townhouses, little duplexes. Like this one's like a little triplex or something. We want actual apartments. All right. All right. So here's the actual apartment. And right now we're just gonna give an example and put one in, but usually you want to have multiple. So in a case like this, I'm gonna put this in a new tab. But in case like this where there's only one apartment, I actually zoom out a little bit so I find some other apartments. All right, yeah, this one is a good fit. Another one, another apartment around here. And basically what you do is, so here you look at the pictures, get an idea of what kind of property this is. Sometimes some of these apartments, they'll be like very old, outdated. And if you're doing a value add, typically you're going to bring the property once you acquire it, you're going to bring it to the standard of that market so you can charge more for rent. So this seems like a nicer property than the one we have, better than our subject property. So if we're going to do a value add, we want to renovate potentially to this standard, or we'll look at the other properties in the market and get an idea of what the overall standard is and who's getting the top rents. And then we can use that to influence our business plan of how we want to renovate and what we want to charge. So it's a good looking property. I'll say it's a good comp. Now they have rents in here, but the best rents is when you can find them on the actual website. So I'm going to look up Park West Apartments, Douglasville. And you see I already been on the website. So in the floor plans, they got the rents here. So you got one beds, you got two beds, you got three beds. And Douglasville proper, which is our subject property, is not in here, but it has one, twos, and threes as well. So we can use these rents. But before we do that, we want to verify that this is an actual comp. So looking at the different criteria, thinking of the criteria, one is going to be age of the property. So this is 1995 built property. Let's figure out the age on this one. So if I Command F, I can search by units. So this is 2002 built. All right, then it's 250 units. Our property is 100 units, so this one's definitely bigger, significantly bigger. But we'll factor that in when we think about pricing. So usually the unit count itself doesn't matter, but you try to have comparable unit counts because the overall property is going to be affected by it. For instance, you can see here the amenities on this. There's a lot more amenities. You got you got a pool, you got a tennis court, you got a gym. Whereas Douglasville doesn't have a pool. We do have a sport court. We don't have a gym. So we don't have as nice as amenities as this property. And we need to factor that in when we're coming up with our rent projections. So we can't charge as much as this property charges because we don't have the same amenities. So that's what you need to keep in mind. Uh, Other than that, I think it still will make a good comp or at least a good reference point based on the renovations that we do. All right, the third thing is going to be proximity. So what we do need to do is find this address, and then I come to distance from to.net. You look up that website, and basically gives you linear distance between 2 points. I already searched for this property, so this is the address for Douglasville proper. Put in the full address, city and state, then the address of the other property, and it's 1.35 miles. So this works. 1.35 is pretty good. Ideally, you want to be within 1 mile or 2 miles. But if you're in a spot where there's just not, it's not as densely populated, so there's not as many apartments nearby, you can expand out that radius. But I like that website because it gives you the linear distance as opposed to like if you use like Google Maps or something, it's going to give you the street distance. So we want the linear distance. So this one's pretty close. So we'll put that in. Built 2002, which is close to 1995. 250, oops, 250 units, which is significantly higher, but 100. But we will just, think about that in terms of what we can charge relative to them. And then the distance is going to be 1.35 miles. All right, now we figured out that this is a decent enough comp. We can't charge exactly the same, but at least we can get an idea of what the market's willing to pay for. So let's look at what these rents are. So you got one bed. Now here, ideally, the best, the most accurate way, and usually you do this if you're really serious about a property, you want to get an understanding of the rents, and it may be a little tricky, then you can actually call. You can call and pretend like you're getting a unit for yourself or for your family member, or even doing a rent survey. But you can call and get what these rents are, because sometimes what is on the website may not be reflected, may not be what's actually going to be the rent if you go to the property. So it's great to talk to somebody. And sometimes in turn, they may send you back to the website as having the most accurate rents. So it depends, it varies. But you just know that that's an option for you if you want to actually call and talk to somebody. And then if they do online leasing, you can even go in as if you were going to do a lease. You don't actually need to get too far into it, but at least, pick like a 12-month lease as opposed to sometimes the starting rent maybe for like a 8-month lease because they want to get unit they're giving a discount for shorter leases depending on time of the year because they want that lease to renew around peak season so they have more opportunities to refill it. So keep that in mind as well. But this one it doesn't really give us the option for online leasing and going in deep. So we're just going to use the 1250 number. So this was a 1 bedroom unit. And so here is the 1 bedroom section. Now you can collapse or open whatever you need. So for the 1 beds, this one's going to be 859 and it's going to be 1250 for the rent. And then this, for some reason, is just not calculating automatically. I don't know what's up with the spreadsheet. Um, Maybe do like calculate sheet. All right, then it's calculating everything now. All right, so it automatically calculated the rent per square foot, which then calculated everything for the one beds is averaging for this property. So I come in here and go to the add in the next one bed. This one is going to be 865 square feet and 1375. And then calculate sheet 159. So higher rent per square footage and a higher rent value overall. Then you got one more one bed. And this one is 887 square feet and it's 1299. Then calculate. So 146. So same rent per square footage as this one. Higher price though. So you can see based on these three floor plans that the average for this particular property is going to be averaging at 1308 the rent for the average 870 square feet and a 1.5 rent per square footage just based on the floor plans. So you do this for each a floor plan type, and you do that for each comparable property that you get, and then overall you have a very good understanding of this particular market, what you can rent for each floor plan, what that looks like on a per square footage basis. So if you have smaller units or if you have bigger units, you can factor that into your rents because you're able to offer more or less space, which is also a factor in what you can rent it for. So this is essentially the steps you would take. You would do that. You would just do it for ideally you want to get at least three properties, at least three comps, up to once you hit about six or seven, like that's good. You don't really need any more. But that sweet spot is like 3 to 5 is usually pretty good where you want to end up. And yeah, so basically you use this. Once you have that, you have your numbers. You can see for each floor plan about where you shake out. And then you will use that to influence where your property sits. Now there's, kind of a judgment and art behind it. If you, as you're going through these comps, you can understand how do they compare to your subject. If all of these comps are nicer than what your subject property offers in terms of amenities or even what you plan to renovate it to, then you need to know then you need to give a discount. But if it's only like one or two of these properties are really nice, a lot of these comparables are kind of average and mediocre, not as good as your property, then you can aim to be at towards the top of the average to be close to the top performer properties if that's where you're going to take your property. So it's not, exactly a science, but it does help inform you that you feel confident in what you can get in the market. So that concludes the rent comp analysis tutorial. Hopefully you got some value out of this video. Hopefully you learned something. If there's anything that we didn't cover that you want to talk about or you have questions about, feel free to drop something in the comments. Ask me a question. I will check up on those and be responsive. But thanks for tuning in and stay tuned for the next video. We'll talk about XYZ, but we got a lot of stuff coming.